As you progress through the different modules, it is assumed that you would have an understanding and knowledge of certain principles and characteristics of balance sheet items. In this knowledge clip, we will look at accrued expenses. We will use some of the theory that you would have picked up from Module 1 and refresh your memory of this account balance and cement your understanding by using an everyday example that you are likely to have encountered yourself. In order for you to know how to correctly treat or account for an accrued expense, you need to know what it is. Many people would automatically assume that it is an expense, right? Wrong. Don't be misled by the name of this account. Accrued expenses is actually a liability. In order to understand why this is the case, consider the definition of a liability. A liability is a present obligation as a result of a past event which would result in an outflow of economic benefits when settled. If you are not familiar with this definition, then refer to the knowledge pod available for Module 1. Now let's consider an example that you may be familiar with and apply to the definition to prove that an accrued expense is actually a liability. Let's assume that David has a mobile contract with Vodafone, which allows him to make calls and only pay for the calls that he makes. As David is still a student, he qualified for a special arrangement which only requires him to pay his phone bill every 3 months. In David's first month, he made calls to the value of $80. So David has incurred a mobile expense to the value of $80, but in his personal records he cannot raise this $80 as accounts payable, as he's only going to be invoiced in several months' time. David needs to accrue for this expense to acknowledge the liability and recognize the expense in the current period to ensure that when the invoice is actually received, the cost is allocated in the correct period. Now let's apply this to the definition of a liability to prove that accrued expense is a liability. As David made calls using Vodafone network and services, he currently has a duty to pay for that service. Thus he has a present obligation. The past event would be the actual calls that he made throughout the month. When David finally gets the invoice after the 3rd month and pays for the calls he made, there would be an outflow of cash required to satisfy this obligation. Thus, there is an outflow of economic benefits. Therefore, an accrued expense meets the definition of liability. You need to remember that before David can recognize the accrued expense liability, it needs to not only satisfy the definition of liability, but also the recognition criteria.